Hello, good day. Now, we are going to discuss the rationale in studying financial markets and institutions. In this video, our expected learning outcomes are the following. First, understand the importance of studying financial markets and financial institutions. Second, explain briefly the need to study the financial markets and financial institutions. Lastly, knowing the effective approach in studying financial markets and institutions. Now, let us proceed to this slide. What is financial markets? Financial markets, also known as Wall Street and capital market, is a marketplace that provides an avenue for the sale and purchase of assets such as bonds, stocks, foreign exchange, and derivatives. Marketplace means ito yung location where people regularly gather for the purchase and sale of provisions, livestock, and other goods. In financial market, we have several types. Andito yung stock markets, over-the-counter markets, bond markets, money markets, derivatives markets, forex market, commodities markets, and cryptocurrency markets. Financial market is classified into two: the capital market and the money market. Sa capital market, andito yung primary and secondary market. Sa money market naman, andito yung mga call money, treasury bills, commercial papers, and certificate of deposits. What is capital market? This market exists for the trading of medium and long-term financial instruments between the individuals and financial institutions. Yung capital market is composed of primary and secondary market. In the primary market, new shares are issued and sold to the investing public for the first time. It is where capital is actually raised by the company selling stock directly to investors, typically through an initial public offering. Example, if ABC Corporation decides to sell a new stock to raise equity capital, it will be a primary market transaction. Since it is the first time the company has sold stock to the public, the term here is an initial public offering, IPO. The proceeds of the sale go to ABC Corporation, the issuing company. Yung mga investors na nag-subscribe to the IPO have provided the company with the necessary funds to continue its operation and expansion and become part owners of the company. An underwriter or investment banker assists the issuer of a new security in setting the offering price and in marketing the securities to the public. The investment bankers serves as a middleman in the transfer of funds between the company in need of capital and the public and facilitates the issuance of shares. There is occasionally a secondary offering in the primary market. This means that the shares of stock being offered were previously issued but is being offered to the public for the first time by a large or controlling shareholder. As such, the selling stockholder gets the proceeds of the sale. Then we have secondary market. The secondary market is where securities can be bought and sold after they have been issued to the public in the primary market. Meaning, if you decide to buy existing shares of ABC Corporation, based sa example kanina, you cannot buy them directly from the issuing company anymore, since they have all been sold to the investing public during the initial public offering. So, how can you avail of ABC Corporation shares when the IPO has been completed? Yung mga investors can only buy these shares from the existing shareholders na kung sino lang yun mga willing na ibenta yung shares nila. Pag may willing, ito yung tinatawag na secondary market transaction. The proceeds sa transaction na ito is hindi na pumupunta sa issuing corporation, which is si ABC Corporation. Instead, they go to the investor who sold his shares. The secondary market is where the original shareholders sell their shares to other investors. An investor can only make a profit when he can sell his shares at a price higher than the purchase price. This market gives a continuous reflection of the value of securities, prices, at some point in time, according to the best available information. Secondary markets include the stock exchange and the over-the-counter OTC market. Now, let us proceed to money market. What is money market? Money market is the financial market which provides very short-term loans or advances having a maturity period within a year of issue. The money market contributes to the economic stability and development of a country by providing short-term liquidity to governments, commercial banks, and other large organizations. Alam naman natin na kapag narinig natin yung liquidity, it means short-term or 1 year only. Basically, some investors na may excess cash can invest here some money markets. There are several types of instruments traded in the money market. Nandito yung treasury bills, certificate of deposit, commercial paper, banker's acceptance, and repurchase agreements. Now, let us proceed to the need to study financial markets. All kinds of enterprises confront risks in a market system, and many of them fail. Due to their critical role in the financial system, financial institutions pose a danger of failure, which worries economists and policymakers in particular. For example, during pandemic, the business risk there, the risk of business failure and bankruptcy. It is outside control of each business in the world. In particular, micro, small and medium-sized firms are at great risk. Financial markets provide finance for companies and businesses, so they can hire, invest, and grow. For example, Apple started in a garage in California. While it had some great ideas, it needed money to make them happen. In 1977, it persuaded a single investor to loan the company $250,000. Over time, the company grew, and less than 5 years later, it was able to borrow over $100 million from financial markets by selling shares in the company. Today, Apple is now worth hundreds of billions of dollars and employs over 100,000 people. So, when they work well, financial markets can make the country much better off. So, and bottom line is, financial market is the area where the businesses can have a debt financing and/or equity financing. Now, let us proceed to financial institutions. Financial institutions is an establishment that completes and facilitates monetary transactions such as deposits, loans, investment, and currency exchange. So, what are the different financial institutions, and how can they help you? First, we have universal and commercial banks. Commercial banks are privately owned and offer basic services like business, personal, and mortgage loans. These banks also accept deposits and allow the opening of savings and checking accounts. On the other hand, universal banks offer the same types of services commercial banks do, on top of being allowed to do other transactions like investing in equities and underwriting. Second, thrift banking systems. It is financial private development banks, stock savings, mortgage banks, loan savings, and microfinance thrift banks belong to. They operate by gathering member deposits and investing them in order to expand. Thrift bank systems is an excellent choice if you're wanting to borrow money for medium and long-term business finance or short-term working capital. Typically, they provide this service to small to medium-sized business owners, as well as those in the housing and agriculture industries. Third, rural and cooperative banks. These banks, which are located in rural locations, give locals the basic access to financial services. Additionally, they help certain groups, like farmers, by supporting their businesses. Lastly, consumer finance companies. Customers can contact these alternative organizations for loans, such as product loans and cash loans. Companies such as these have less requirements from applicants than banks and other financial systems, which makes them a good choice for people who are not often accepted by banks due to a lack of banking history. Similar to the other institutions on this list, authorized consumer finance companies are also regulated by the Bangko Sentral ng Pilipinas. Now, let us proceed to the need to study financial institutions. The financial market functions because of financial institutions. Without these financial institutions, financial markets would not be able to move funds from people who save to people who have productive investment opportunities. Meaning, financial institutions have important effects on the performance of the economy as a whole. Financial institutions are essential for businesses to grow, and households could only buy goods, education, and housing that the families have cash for today. In any economy, financial institutions play a crucial role in providing services to the majority of people, whether in banking, insurance, or securities markets. Financial institutions are essential to people's and businesses' transactions and investments. One of the first steps to creating a society that is financially educated is understanding the fundamentals of financial institutions. Now that you're more familiar with how they work, you are more equipped to use your financial power by tapping these providers. Now, let us proceed to the approaches in studying financial markets and institutions. The first step is understanding. In this step, individuals acquire the economic intuition necessary to arrange ideas and data when they study economic analysis. The second step is evaluating. Individuals acquire the ability to assess financial news and current events. Individuals are taught to apply economic analysis and financial statistics to critically evaluate their interpretations of current events. The last step is predicting. Individuals acquire the ability to forecast potential shifts in the financial system and the economy through the application of economic analysis. Now, that is the end of this video learning material. Happy learning!